And we are live. Hello, everyone. Welcome to a new episode of, I wanted to say Crypto Bull, no, of Blockchain Talks. Crypto Bull is for tomorrow, where I do a live stream analysis if I can find a coin. Now, today we're going to talk about the main subject here concerning regulation and legislation, give a little brief overview what is occurring behind the screens. However, I do want to draw your attention to, well, I'm first going to do a little analysis of current market state. Now, a lot of people are saying, well, everything is turning red. Quite frankly, it is. As you can see, quite a lot of red numbers, a red tidal wave as it is. Let's take a closer look at Bitcoin here, because that's the one coin with the highest dominance in the entire market. And if it goes down, everything else goes down naturally. So 24-hour trading, you can see it went down quite badly, tipped below 40k levels. Now he's on the recovery, seems to be a little bounce here, a little bounce, well, tiny one here on the hourly approximately, back to 40k, and we're probably seeing 40k as heavy support. Let's zoom out at the 7-day or the weekly. You can tell there was some sideways trading going on, but eventually it went down. It crashed down. 14 days. You can see bearish sentiment. Now, some of you guys might say, yeah, it's bearish. Not necessarily, I'm going to say. On the monthly, we can see there was seemingly a local top. Early March, we were at even lower levels. And now we come at the chart I want to show. Well, charts I want to show. As you can tell, there's still bullish sentiment if you take into account lows here. So low beyond 35k in January of this year. February 24th, we went down to 35k approximately. And then this dip at around 39 or 40k. If I were to draw a line, might see this is actually an uptrending line. Everything above is, well, a temporal overvaluation. Now, a lot of you guys know I've been saying, look, we are currently sideways trading, which is still something I'm holding on to. My reason, this is from half a year, so pinning from the last all-time high November up until now. Might see there was some bearish sentiment up until January with, well, the lowest point here at around 35k. However, I started counting since the beginning of this year, and since the beginning of this year, you might see we're actually trading sideways for the last 4 months. Sure, we had some lows here and there, as you can tell, but in general, it's sideways, and there's a little bullish uptick. I hold the position that everything underneath 40k currently still is buying opportunity. Everything above it, best to hold your coins. As can be seen here, overvalued, crash down, overvalued, crash down, overvalued, crash down again. Now, I was actually surprised in the last couple of weeks by seeing, well, this growth curve. To be honest, I thought here Sunday 20th of March that a local peak will be made approximately here, so up until next week. Well, the week after, so at 26th of March approximately, and that we'd go back down. However, it kept climbing above 46, 47k levels, and actually maintained for some decent time those levels, whereby I thought, yeah, we'll be crashing down shortly, but didn't occur, and now finally the correction came. Which means, well, my theory of sideways trading of accumulation period is still ongoing. Now we've seen the higher tops, and I'm going to put it this way. You can tell bullish, here became bearish, and you can see little tops, sell-offs, etc. We're trading more or less sideways, but with bullish sentiment. That's my technical analysis. That's how I see the market currently evolving. I know there's a lot of people saying, look, we will be seeing new all-time highs in May for Bitcoin. It isn't going to be the case. The halving cycle has ended. Now we are, well, in some sort of consolidation phase. Not consolidation in the sense of we're going to go down. No, we're going to trade sideways. It might be the case we're going back bearishly, so have heavier corrections. Even it might be the case we go up a little. So the kind of movements you're seeing here will be quite natural and will mostly be sparked by world events. Speaking of world events, regulations, legislations, I want to start with that one. However, this is the first article I want to briefly cover. News from Crypto Briefing. Financial advisors want spot crypto ETFs but suspect SEC won't budge. Report. Now, this is all about the US SEC, their taxation, the other Securities and Exchange Commission, always refusing to implement an ETF or spot trading. Now, in a sense, I might say it is good news they are refusing to do so. Myself, I'm not all too much of a fan of derivative trading, of trading in options, ETFs, and, well, spots. The reason thereof is you are not going to hold real Bitcoin or real cryptocurrency, but you are installing mechanisms, means to leverage the market, to centralize all the decentralized cryptocurrencies. It's not something I'm much of a fan of. Some people might say, what are you telling me here? Centralizing decentralized currencies? What? With that, I mean you are going to implement a mechanism whereby institutional investors, big financial institutes, are going to amass Bitcoin in a centralized way, whereby lots of people can, through their platforms, start trading spots, ETFs of the cryptocurrencies they hold. But it means those traders do not hold the cryptocurrencies themselves. They're merely trading a derivative, as I tend to say, meaning those financial institutes will be holding the factual Bitcoin and all the profits and gains that come with it. So myself, I'm against crypto ETFs, but for the reason that it grants too much power towards a variety of brokers and trading platforms. If you want to invest in cryptocurrency, if you want to invest in Bitcoin, I have always held the opinion you go through an exchange or you start mining, you buy and you hold the cryptocurrency itself, and you make use of it. Bitcoin, in its white paper, has been mentioned as peer-to-peer electronic cash system. It is digital money and you can use it as it was intended. And this goes up for a variety of other cryptocurrencies. So, for heaven's sake, do not start trading in ETFs and spot trading by reason as a small time investor. Well, I'm not even going to call you an investor, but a dirty speculator. You will always be on the losing side. By reason, if you trade options, if you trade spot ETFs, you're not having real true ownership of your coins. The broker does, financial institute does, not you. They can leverage the market because they have full ownership. So each time I see, and a spot and a crypto a Bitcoin ETF, my heart skips a beat. And especially when there's a majority of influence like Crypto, even BitBoy, Lark Davis, and other dorks, I'm going to say, shield influences, they will be hailing it and say, there's new money entering the cryptocurrency market. It's going to be leveraged out of it. 100% sure. I've been way too long in this game and I know way too much about classic finance to know how everything works. You shouldn't be celebrating, the creation of a crypto ETF. It is a leveraging tool. So on one hand, I'm happy the SEC, Securities and Exchange Commission, isn't implementing it in the US. However, I know future-wise it will become the case if more and more regulations and legislations have occurred. In a certain sense, are they currently shooting their own feet? So on that account, I might say the speculators are right by saying they're being dumb. On the other hand, the speculators themselves are being dumb for promoting crypto ETFs because they're basically saying we want you to have a big piece of the crypto cake and be able to leverage it. So they're dorks, they're idiots, anyone who supports it. But that's my own opinion. Take it or leave it. You may attack me if you want, but I'll come up with enough arguments to counteract. Anyway, regulatory compliance. Regulating the cryptocurrency industry as a path to mainstream adoption. Now, I have chosen this article. You may read it through. Link stands here online. You can pause screen and write it over. This is something that a lot of influencers also have been vouching for, have been, I'm not going to say promote, but applaud. And it is something I stand starkly against. By reason, cryptocurrency, and especially Bitcoin, has grown as big by reason it was unregulated. Sure, I've been telling everyone, look, the cryptocurrency markets, the crypto markets themselves are still a wild, wild west. It is also a wild, wild west with plenty of innovation. The second you start implementing regulations, legislations, you want to start steering the market, well, you are starting to build dams. You are damming in innovation. You are halting it. By reason, people now can use their creativity to create whatever kind of cryptocurrency they want, whatever kind of blockchain project, implement and attract industries and make them blockchain based. There's an entire sense of freedom about it. It's a real free market. But people say, yeah, for mainstream adoption, you need to regulate it. And in a certain sense, I can understand that statement. By reason, well, as many of you know, the cryptocurrency market is littered with scams and hype, pump and dump schemes, etc., etc., rug pulls. There's been plenty going on. However, what people fail to realize is that those scams and rug pulls are factually quite obvious. As a matter of fact, those are the same kind of scams which are being pulled with classic fiat trash money. Um, it implies sending over your cryptocurrency to addresses and hackers. It is about, well, investing in punk projects, something which also occurs in the TradFi system. And while it isn't as highlighted as in the cryptocurrency market, it still occurs. It still is happening. And if you guys doubt me, everyone in their lifetime and everyone at least once a week or month is being approached by some kind of Nigerian prince promising, well, a cut of a bank account of an inheritance, etc., or a variation of it. So, in that sense, I get regulation is needed, but at the same time, it won't halt the kind of scams and rug pulls that are happening. A reason it still occurs in the TradFi system. And this is actually being used as an excuse by multiple governments to push legislations and regulations in order for them to maintain a big piece of the cryptocurrency market. Well, for them to get it in all actuality. With that, I mean, currently they have no real influence by reason they do not really have any wallets or leverage, but they are creating mechanisms to do so. Their main point of entry is regulation through central exchange. I believe the next tweet to load it up here. Yeah, let's follow it on. Yeah, going to continue here. Their main point of entry are still being central exchanges. The last couple of years, they have been pushing for more severe KYC, know your customer basis, know the identity of the persons making use of the exchanges who are actively buying and selling cryptocurrency. And very basic legislation exists. Now is, well, this year tax season is coming up, and well, in more and more countries did a sudden rule pop up: have you invested in cryptocurrencies? And they start demanding information. Now naturally you do not need to fill it in, by reason it is up to them to prove you have invested in it. If you're telling it them yourself, yeah, naturally you're going to be taxed on non-realized gains on your speculation. See where I'm going at? However, now they are pushing it farther and farther. And this is a little treat I made last week, approximately exactly 6 days ago. And in it, I talked about a little article I encountered. Unhosted is unwelcome. EU's attack on non-custodial wallets is part of a larger trend. Now, do understand, you are on a centralized exchange: Coinbase, Binance, Kraken, Bitvavo, Gemini, and many others. And you've got your built-in wallet whereby you can buy and sell your cryptocurrency. But if you're like me, you naturally have multiple wallets. So on your smartphone, you have a hardware wallet, you have a digital wallet. And you want to store your Bitcoin, or you want to store your Ethereum, Chainlink, Ravencoin, Nano, etc., etc., etc. Now they are pushing on top a regulation. When you enter to the central exchange, they asked you for some private information. You needed to be verified. You needed to show who you were to the exchange itself. And now is the EU, Europe, actually attacking on a different side. They are saying, okay, central exchanges are still our main entry point, but there's still a lot of Bitcoin. We cannot monitor or force the central exchange to hand over the details. And that's because of private wallets, the so-called smartphone wallets, digital wallets on your computer, hardware wallets, etc. They cannot control it, by reason it isn't attached to the central exchange, which they can force to have a KYC and know how much you hold. And this is their next push. They're now saying, look, starting from a certain amount being transacted towards a private wallet, the central exchange needs to demand a KYC for your private wallet. And you might say, yeah, it's a little detail, but it's actually quite big. By reason, you are now giving a central exchange access of, you're now actually making it known to the central exchange, and in extension, the governments, you have private wallets, which they can verify through a blockchain explorer how much funds are on these. Meaning, the governments are starting to know how much Bitcoin you really have, how much you've mined, how much you have bought, sold, etc. That's your total cryptocurrency funds. And that's one very dangerous piece of legislation and regulation. And that's one of the reasons the title was Unhosted is Unwelcome. By reason, they want to know all your financial details so they can tax the fucking hell out of it. That's basically what this article is about. And I'm going to show it here. Was it? Yeah. So this is the main article from Cointelegraph. I advise you guys to read it up, as it talks exactly about the things I've been saying here. So block transactions with self-custodied wallets altogether, they face surveillance and disclosure requirements, etc., etc. Part of a larger trend. Now, from Crypto Potato, a few days later, I put up, and I'm going to highlight this article: EU targets crypto wallets with the latest package of sanctions against Russia. Please do keep this one in mind. Unhosted is unwelcome. Self-custody, they do not like it. They want to know. But naturally, software needs to be tested. And currently, the war Russia-Ukraine is actually quite a good excuse to start measuring up the software and their capabilities. Hence, this article. The European Union targets crypto wallets with the latest package of sanctions against Russia, meaning they are now soft force implementing their ideas that they want to push against their very own people. They're now doing a little trial and test run against a so-called perceived enemy, meaning Russia. They're going to say to the central exchanges, look, we do not want to deal with Russia. They're bad. There's the war. They've done an invasion, etc., etc., etc. But we cannot allow them to evade the sanctions we've lifted against them. And cryptocurrency tends to be one of those assets whereby they can evade the sanctions. So we want to start monitoring it, not only through the exchanges, which need to block all Russian users from their platform, but also get an idea of their self-hosted wallets. This article really is talking about self-hosted wallets of citizenship, of self-hosted wallets from the people themselves. That's what it is about. Now mainly targeting Russia, but as soon as it is implemented and they know it can be done, nothing will stop them to do the same to their own citizenship for the entire European Union. These are the kind of regulations and legislations you need to watch out for, especially when you're supporting something like this. It is plain bullshit. Now, what are their capabilities? Well, this is actually an older tweet I made where it concerned the Canadian truckers, the Freedom Convoy in Canada. And up here, the news was mainly about, government has frozen the Bitcoin wallets, self-hosted and on exchanges from the truckers itself. That was, it was this tweet actually whereupon I was reacting. I'm going to let it load. Bitcoin donations have been frozen and seized by Motherboard. And my response was, it is fake news, because Bitcoin cannot be frozen. As soon as you keep it in a self-hosted wallet, you can do whatever you want. No one can censor it. If they want to censor your transactions, they need to perform a 51% attack. And quite frankly, no one has the funds or is as stupid enough to do so. However, what can be frozen are the centralized exchanges. And the truckers who have been receiving Bitcoin, of receiving a variety of cryptocurrency, well, their only means to cash out and transform it towards fiat trash money, well, need to pass through a centralized exchange. And it's only at that point that governments can say, we are going to seize it, we're going to freeze it, because that wallet are known to be linked towards the Freedom Convoy. See where I'm going at? Hence why I said, use Bitcoin wisely, peer-to-peer as intended. I said it at the beginning of this video, now I'm repeating it once again. You might see, I went deeper, there's a bit of fake news involved, something which is kind of obvious. I highlighted the important part from the article. Can't cash out, once again highlighting centralized exchange. This is a literal piece from the text quoted. Many truckers now can't cash out their donated Bitcoin due to financial sanctions. People are pushing it and say, yeah, the Bitcoin's frozen. It isn't frozen. It can still be transacted. It can still be used, but they can't cash out. They can't really trade it for fiat trash money. That's one of the big subtleties here. And that's one of the biggest strengths of Bitcoin, that no government, no matter how much regulation and legislation they're going to push through, can stop. Only point of entry are the centralized exchanges. And thus, these are the kind of pushes they're trying to implement, trying to get a better hold of self-hosted wallets, to get a KYC, to have them targeted. They can't stop the transactions from it, but they know whom to address. if a transaction occurs, and if that person is being seen as a criminal or highlighted for criminal activity in their eyes and opinion, naturally. That's the entire gist of it. So do watch out when you're vouching for more regulation and legislation in order to have more mainstream adoption, because these are the kind of dirty moves that are being pulled. They want a piece of the cryptocurrency cake. They want to leverage that market straight back into their pockets. Um, the biggest strength of the cryptocurrency market, the biggest strength of Bitcoin is its decentralization. It is its peer-to-peer use. So don't start buying in with ETFs, options, or whatever option derivative trading. Buy, hold, especially in a self-hosted wallet, and do not pass through centralized exchanges. Do it less and less. By reason, things like these, as you can see here on screen, well, are going to occur. They will start demanding KYC. They want your crypto, they want your Bitcoin, no matter the price, no matter the cost. So with that, I'm going to stop sharing my screen, and I'm going to thank you guys all for watching. Hope you learned a few things here. I hope you learned a few backhanded manners on how government and central exchanges also, but how banking systems and governments work and how they want your cryptocurrency. So thank you guys for watching. Hope to see you until next time. Please like, subscribe. If you want to support the channel, down below are a few links, and until next time. Bye.